Welcome everyone, this is Scramble from Emotionless Crypto Trading. Another day, another discussion on BTC. We just seen a crash going on and I'd like to share with you some details which are important as price perspective and technical analysis. Right, so there's a lot of the people confusing trading with gambling. There is a huge difference between these two. And with trading, it is up to you if you're making the profits, but with gambling, it is up to that machine if it's providing you that percentage of profit, which is already set up in order to give out, right? So it's a different story. It's a total different story, talking about a natural market that moves depending on buying and selling orders, or a machine which is poorly represented in the gambling industry. That is completely different. Attention, this is not gambling. Do not trade like you would gamble, and make sure you recognize when you do that, then stop the action, check the technical analysis, price analysis, see where you have to react. That's how it works. Great. So today we're going to talk about BTC, and we will have some details because of the last crash. I do believe it is important to cover a few lessons that we would have to gather out of an event like this. Right, so what we have done in the last 2 weeks is to increase the average volume. We used to be anywhere between 13 to 15. Now we're above 15 up to $17 billion a day on average. If there is a day when there is higher movement, then we're above $22 billion. These are the new statistics for the 24 hours volume. Market cap decreased more than $10 billion, about $15 billion crash. 123 is worth right now, and the BTC dominance increased, as obviously whenever the market is crashing, BTC dominance is increasing, and the reason behind that is just simply alts are not having enough power and stability in order to keep up with the low speed decrease of BTC. That's why they're suffering more. Very noble. Let's just go ahead and look into the details of the technical analysis, and here we go. This is the 30-minute candlestick chart on BTC paired up with the US dollar on BitMEX exchange. We're looking at the details for short term. We've got this green trending line starting from left right here from the bottom, which is called the uptrending channel support line. It did supported us quite nicely, very nicely actually. There's a little false breakout here, but we pretty much came back into the channel extremely fast. Now here, there is an entry for long. Very nice entry. It confirms exactly on the line like it would be handcrafted. Here as well, it is another entry for long. And if you go there, there's a lot of possibilities. Let's just make a quick calculation. 6%, 6.3% if you do regular trading. If you put this into margin trading, leverage trading, then this thing could be an easy 30%. An easy 30% increase. Depends on the margin you're looking to consider and the risk that you would like to assume. So this is the long candlestick, which tells us we're getting into a danger zone. And we would have to be careful because after that, we're able to see lower highs just like that. You can see how the market is establishing lower highs, which is a detail telling us that we would have to get out of the trade because we are in danger zone. And you will always have to do a calculation whenever you are in an active trade. Where is the danger zone? What is my current status? And if it's worth to keep my position, open it up in a danger zone like this, for what probabilities? For another 2% or 5% or 10%, you would have to see if it's worth it, because you're already risking profits for some more profits, but the situation is different from the time you have joined, right? So the situation is already a new one, and you will have to recreate another technical analysis, run the research, run your understanding, your skills and your knowledge, and see if it's worth to keep your trade open. Because I've seen some of my students were keeping their trades open after they have gained 40%. For another 5%, they were risking a lot, right? So if the risks are increasing and the position is not representing a probability for the bulls, and it's pretty much a probability for the bears, but you're still holding because there is a possibility for 2%, well, if you already gain a lot, then your position is no longer worth it. So you would have to sell. This is the way to react rationally, right? So this is where we are. This is what we have. Then we have established a new structure after the long green candlestick, right? So the structure has a nice support zone at $4,000. Very nice support. We thought, especially the media and not me, but we from the crypto space, we thought if we get a little bit of support across a few days right here, then we're going to try to break out of the 4,500 resistance, and we're going back again to $10,000, and of course all-time high from there. Like things would just come out of the nowhere, out of the blue, that easily. That's how media treats, and that's how media handles such a green candlestick. Right? Look at that situation. That's how media handles it. They're telling you, and they start speaking about all-time high. They start speaking about what is beyond the all-time high. They request interviews from this all type of gurus, which I like to call them pretty much without any sort of hard feelings, just simple charlatans. Media is interviewing them at the time we got a big candle like this, and they're asking for a prediction. What the guru does, the guru is not going to be honest with you. The guru is not going to say the truth, which is the data. Just, he should say, go out there and do your technical analysis and see how you would predict for yourself. I can't predict for yourself. Read the data for yourself, do your understanding, and do all these things for yourself. That's how the guy should respond if he would be honest, right? But the thing is, it's very much easy for a guy out there to say that BTC is going to be $1 billion by the end of the year, because then the media picks that information up and spreads it everywhere. So it manipulates the market wrongly. People buy, whales are selling to you. People react on the news and of course on their emotions. What happens when a average Joe sees a post like that? He sees BTC is $4,000. He has 25 grand in his bank account saved, for example, and he sees BTC is 4 grand right now. He walks around this media websites and he finds out that there is a guy which is Guru. It's an amazing CEO of whatsoever company out there, and he says that Bitcoin by the end of the year is going to be $1 million. So what the average Joe does, he goes over a exchange and buys into the space because of the feeling he is having after hearing about $1 million from $4,000. He does a simple calculation and he says, I'm going to throw in $10,000 and I'll have to make this amount, a lot more, huge amount. That's great. I'll do this. If the guru said it, he's, pretty much an amazing person. And he has all the rights to tell me what should I do with my money. He has all the information in the world and controlling the market as well. That's why he calls all these things. Because, 99.99% of these predictions are just details and actions in order to gain audience. His name is going to appear in 5 media posts, and totally speaking, if we add all the views of those media posts, there's going to be at least 500,000 people that watched at least the title of the article. And if you look at the titles, his name is going to appear in the title plus the prediction he made. So stay away from this. Please stay away. Where you can get a prediction is right here on the charts. They're the one moving as the market moves, right? So you see the support zone 4K structure, this blue area, it breaks below. So there is an entry here for the short. If you've done that until now, you have 8.7%. Plus the leverage can be a lot, can be 200%, can be 50%, can be whatsoever depending on the leverage you have made. We also broke below this line quite powerfully. We didn't even decide or negotiate it at all, which is went quite parabolically, but there's another big deal what's happening right now. Take a look at what I'm writing here. Bearish flag pattern. Take a look how it looks like, right? So it's coming down and then it has a movement like this. So let's have a look at this. Bearish flag comes down and has a movement up. This is the definition of this pattern. Now the reason why it's called bear and not bullish or any other way, it's because in the majority of the cases, at the end here, where we have the last candlestick, there is a breakout below once again, and the long crash is continuing. So that's how this pattern used to react. But trading is based on probabilities. So there is a probability of 70% for the bear flag to continue and to react correctly, and there is a 30% probability for the market from here to break out just like this and exit out of the bear flag in a non-correct way, right? This is what trading is. That's why you have to react based on what is going on in the market and not before knowing what is going on. There is another thing that appears here is the 3,650 resistance line, which has two confirmations here. Look at that. Supporting us very nicely, another support here. But for now, it's transforming into resistance, and we already have the ability to see that over here. Right? So we're going to have resistance once again at this level. Tens of millions of dollars sold every hour at that level. At least in BitMEX, I've seen those statistics. Right? So this is the current situation of the BTC. This is what we would have to consider. Beautiful. Going towards, we've got a 2-hour candlestick, and we're going to see a swing trading chart here. Very nicely getting supported, putting us a resistance, support, support. 3,600 has a very important role. 3,600, 3,650, anything around that level has an important role in the current structure of this. Right? You see it's kind of in the middle, slightly below the middle line as a difference, and market reacted tons of times whenever we have touched that. Great. What happens if we break below that? Well, there is a huge difference from this level to the 3,100, and we could measure that. We have 15% difference, right? 15% probability until we're touching the next major support. Keep all these things in mind because that would mean a double bottom position. We had nice support previously over here as well, so we could expect the same thing. This one right here is another chart, is a crypto total market cap. Right, so it shows the chart of the market cap, of the one which appears here on coinmarketcap.com. The movement of the market cap. By the way, CoinMarketCap shares is 123 billion. Actually, it's just 119 billion. These guys right here are not updating that fast and automatically. And of course, statistics here are created by the CryptoCap. Right, so take a look what happened at the time we had the crash. Take a look at that. This is where I want you to take a look. Do you see we have the long-term resistance line of the market cap? Do you see how nicely it confirms over here? Can you see that? Of course you can. Can you see how nicely it confirms exactly on the line over there? Of course, can you see that? If you search crypto total market cap and you see it must be 1 day and crypto cap here. If you search it over here, you're going to see the same statistics like I'm saying, as long as you have the same settings. So this guy right here reacted correctly. We're still in the bearish, downtrending environment. Look at that. And this is how the crypto space is reacting, exactly like it would be handcrafted on the lines if you draw them correctly. This is what the price analysis and the technical analysis does, as long as you know how to trade. Beautiful. Bear flag, we spoke about it. Bull flag, exactly in the opposite way. That's all. Some news, well, we always have. Goldman Sachs backed Circle says it's all in on crypto. Of course it is. There's many companies investing in cryptos. I don't believe it's all in. It's just probably a part of their portfolio, which is very small, diversified into cryptos. Very simple. Like many other companies. I don't really believe it's all in at all. On the other side, I mean, nobody goes all in anything, especially Goldman Sachs, or not even a guy that has $1 million, not even he does such a mistake to go all in a single thing. There's many people who invest in gold, silver, and crypto. Real estate is the fourth option, right? So depending on the risk you like to assume and capabilities of handling everything, and of course the amount of money you have and strategies and all the things. But if you're a big guy with tons of millions and trillions and billions, invest in more than just crypto. Invest into gold, silver, and real estate as well. But that's, another topic, because it's really important where you're investing in real estate. Like, in which crypto? The same topic. Same questions. Bitcoin might replace gold, says Nick Szabo. According to popular cryptographer Nick Szabo, central banks might resort to cryptocurrency reserves. Right, so I'm going to say one word and then I'm just going to stop about these kind of articles. Right here, might. Look at that. What does it say? Might. Central banks might resort. Bitcoin might be 1 billion by tomorrow. Ethereum might be 1 trillion by the other day. Or might be $1 by the next 10 minutes. It might be. This kind of news we're getting from the media, and this kind of things are just thrown in front of our eyes like the sand. That's pretty much all that we would have to handle. This is pretty much all on this video. Feel free to look for the one-on-one coaching in the description area of this video presentation. You can have a little call with me where we can have a conversation about it. Feel free to subscribe, like, comment. I would appreciate everything you're doing, and appreciate if this one helps you. What do I mean by this one? Is the entire content I'm putting out. Right? So if this one helps you, then thank you for giving me the chance to help you. Thank you once again, and we'll talk to you soon.